What is going on, traders? Welcome back to the Traveling Trader. Happy Thursday to you. Today we're going to get into a few things, but I wanted to explain why altcoins are taking a beating against BTC value, especially because a lot of you have had that question both in the Discord as well as YouTube comments that have been sent to me, and just scouring the internet on forums, seeing that people have this question of why altcoins are taking a major beating. And you could see here on coinmarketcap.com, the beating that these alts are taking. I mean, it's just a sea of red. A lot of altcoins you see in double-digit percentage losses. Binance Coin, IOTA, Cosmos, XLM looks like there's no redemption of sorts. ADA, same place. It's in the same place. So why are these alts taking a hit? So I'll discuss that. A couple of big news items in the market. Uber is IPOing today, and then obviously the trade talks with China has come to an impasse, and that has had an impact on market prices today, obviously. So let us start by going over Bitcoin's chart, and we'll segue into why altcoins are taking a beating. So looking at Bitcoin's chart, this is the Coinbase price, and I like to use the Coinbase price because this is the one that's unaffected by Bitfinex and Tether, the premium that the market will pay for Bitcoin if you're on Bitfinex or using Tether. So I find this to be the truest Bitcoin price as of now. Looking at Coinbase, we have crossed the $6,000 mark. We're currently trading at $6,058. There is definitely heavy bearish divergence rearing its head here between the price, the MACD, right, and the RSI. And what this tells us is that there is a potential that Bitcoin will see a retrace soon because of this divergence. This, when the price makes a higher high and the oscillators make a lower high, this is called bearish divergence. However, when is it going to make this retracement? Will we be able to hurriedly rally up to 6,500 before that happens, right? And I hope that happens because will allow us to retest a previous high. If you've seen some of these videos before, you know that I mentioned that we need to cross above 6,500 eventually to call this a rally. And the reason is because if you look at Bitcoin's chart, you'll see that it is just a series of lower highs coming from December 2017. And this last lower high here was at around 6,500 before we just dropped off in November and have been in this puddle of quicksand ever since. So if we can climb out of that 6,500, the same level that you see us falling down from, then we can start talking about a reversal. The terms bull market and bear market are not really useful because a bear market is basically a decline of 20% or more, and a bull market is an increase of 20% or more loosely, but it takes a much shorter price movement on the way up to gain 20%. If you look at, from 4,100, 20% was, around just shy of 5,000. So, technically, yes, fine. You could say that we're in a bear market for a bull market for 2019 for Bitcoin, but that doesn't really mean much in the grand scheme of things when you take the entire data in context. So anyway, that's what it is on the daily. Obviously, there's the golden cross between the 50 and the 200. Hopefully the 100 can cross above the 200. But the main question now is, can we get to 6,500 and retest before seeing a retracement? Now, when I say retracement, I'm not one of these guys that's going to tell you, oh yeah, we're going to retrace to 2,000. A retracement has to be realistic depending on what the market circumstances are providing at the moment. So a retracement to me can easily be at this previous level that we see here, which is at around 5,600 or so. And then, down from that, you can use either the Fibonacci levels or you can use the moving averages or a combination of both. So I'm not one of these guys that's going to hypothesize we're going to hit 6,500 and then drop to 2,000. Those kind of asinine predictions are not really useful in trading either, right? Because they're not realistic and they don't really provide realistic markers for you to schedule your trades around. Looking at Bitcoin on the 1 week, we are comfortably above the 50-week moving average, right? And we're hitting a wall at the 100-week moving average. Now, I love when stuff like this happens because when the different time frames start corroborating each other, right? So you remember this level here, the 6,500 level here, which was the cliff from which we dropped off. Well, if you look at the 1 week, that 6,500 is where the 100-week moving average is, just about there, right? So this is clearly resistance both on the 1 day and the 1 week. And if we can cross above that, then again, we can say that we are on the path to reversal. We do have a little more room to grow on the RSI, but the stochastic looks like it might be ready for a bit of a pullback as we are overbought conditions on the stochastic. The MACD has a lot more room to grow. So the stochastic can actually remain up here for quite some time. If you look on the 1 week, we were teetering on the overbought level here for almost a year, going from overbought down to range bound in the cycle. So it doesn't mean that we'll see on the 1 week a drop in the stochastic from overbought to oversold. Looking at the 1 month real quick, we are comfortably above the 21-month EMA, which is this white line here. And you can see the MACD, even though we've had a good 4-month run of bullish behavior, the MACD hasn't even crossed yet. And the stochastic is just now starting to curl upward. So in the long term, again, I'm still very bullish on Bitcoin. Now, here is the main topic that I wanted to discuss. Why are altcoins taking a beating? So if you look at the volume of Bitcoin, right, we are now in historical territory. And what I mean by that is, thank God that CoinMarketCap provides a lot of historical data. But right now we're doing $16 billion of volume on Bitcoin daily. We might be taking this for granted because ever since March, we've been doing double digits consistently. But people forget that back in 2018, we were dealing with the low single digit billions, right? So we're talking about triple, sometimes quadruple the volume that we were seeing almost all of the second half of last year. I keep scrolling down the list. This is 2018. You see how we're consistently at 3 billion, 4 billion, 4 billion, etc. So we might be taking for granted what Bitcoin's volume is doing. Now, that volume is coming in the form of mostly USDT. So if you look at Bitcoin's markets, you'll see that most of the pairings, of the top pairings, are USDT, and this is sorted by volume percentage, right? Except for BitMEX, which is a derivatives or a futures-based exchange. Most of these are spot exchanges against USDT. Why is that? Well, because of all the FUD surrounding Tether, right? A lot of users are exiting their Tether and anything associated with Bitfinex to get into Bitcoin. And that is just a testament to the market perception of Bitcoin, right? The market perception of Bitcoin is that Bitcoin is a safe asset and a valuable asset, kind of like gold. So people are taking Tether, or what they deem to be, a tenuous and unstable currency, and transferring that for Bitcoin on large scale amounts. So with that said, when you are hoarding your Bitcoin or exiting Tether into Bitcoin en masse, what is going on? You're not going to give up your Bitcoin to buy nameyourshitcoin.io, right? Like you're not going to give up your valuable Bitcoin right now when the market is tenuous and you think Bitcoin is the safest bet. You're not going to give up that Bitcoin to buy some willy-nilly altcoin, no matter what that altcoin is, even if it's in the top 10 or top 20, right? So there just isn't enough volume on BTC pairs of altcoins for there to be any movement in the price of altcoins. And that's why altcoins are taking a beating. And you see that also with the fact that Bitcoin dominance now is almost 58% according to CoinMarketCap, depending on which data you go with. Because if you look at the Bitcoin dominance on TradingView, you'll see that we're over 60%. And this is, just different ways of calculating, I guess. But we're almost 61% Bitcoin dominance on TradingView. And this isn't anywhere near the all-time high. A lot of you who are new to crypto forget that in January of 2017, we were consistently in the high 80% Bitcoin dominance range, right? And a lot of that is due to the fact that we didn't have the means to trade altcoins like we do currently, and there just weren't that many altcoins around. So Bitcoin was really the only game in town at that point. But 61% after the famous bull run at the end of 2017 is relatively high. I mean, there was a point in the beginning of 2018 where we were in the 30 percentage point range, but now it is almost 61%. And it might help to understand the relationship between altcoins and Bitcoin dominance if we overlay the total crypto market cap on top of the Bitcoin dominance. So this total crypto market cap, I included Bitcoin in here as not to bias the graph, right? Because if I took Bitcoin out, yes, of course, as Bitcoin percentage goes up, the crypto market cap without Bitcoin included will likely decrease. But even with Bitcoin included in the total crypto market cap, you see that there's an inverse relationship between the total crypto market cap and Bitcoin's dominance. So as Bitcoin's dominance falls, you see total crypto market cap rise, and this is including Bitcoin, and vice versa, right? It's an almost inverse relationship that you can predict at this point. So that is why altcoins are taking a beating against Bitcoin. Now, this does provide a great buying opportunity for a lot of you that only know what it's like to purchase crypto at the high, right? These are insane prices. You look at XLM, you look at, Cardano. I'm not saying buy these. I'm just giving you examples of alt. Even BNB, a coin that I've been heavily bullish on for so long and that's netted us over 200% gains, has now taken a major hit. There aren't many swing trading opportunities in the market currently because of, what I just talked about with regards to the altcoins. And if we go back to it, you'll see priced against BTC, just what kind of beating the altcoins are taking. We did have a small swing trade on Link entering at 10,400 sats and rode it all the way up to 11,400 sats. And it within less than half an hour, it came back down to where we entered the 50-day moving average range. Obviously, we had a trailing stop limit, so we took profits as it started declining. But this was really the only swing trade that was valid in the last week or so. I did have a swing trade on Nano and a couple of other coins, but I exited those with a stop limit after the Binance fiasco happened a couple days ago. If you want access to the trade alerts, link is in the description. The Diamond Traders and above also gives you access to the stock trade alerts, which is less than a cup of coffee a week. I try to make it fair for everybody. I truly do. So speaking of the stock market, the stock market has actually been a major gainer for us in the last week. There's been a number of shorts that I sent out trade alerts for. Monster Energy Drinks was one. Lyft was another one. The SPY, which is the ETF that trades against the S&P 500, was another one. I sent out alerts for all three of those, and we were able to take profits on all three of those trades. Looking at the markets, again, I discussed that the China trade talks, which have stalled, has had a significant impact on the market. You see the Dow down 0.5%, the S&P down 1/3%, same as the NASDAQ. And the biggest news in the market is Uber is IPOing after market today. The expected evaluation for Uber is $90 billion, which is insane. But that is part of the reason why I did initiate a short on Lyft, is because Uber was IPOing. And since Lyft is seen as a major competitor for Uber was likely to outshine Lyft in the short term. Anyway, that is it for this video. If you have a question or a comment, leave it in the comment section below. Leave a thumbs up if you got anything out of this video. Sign up if you want access to the trade alerts. Again, the Diamond Traders and above gives you access to the stocks and crypto alerts, and you're automatically entered for the 0.03 Bitcoin drawing that I do every month. Plus, you get to be a part of a dynamic trading group where we're always talking about trades and discussing strategy, etc. Subscribe to the channel, hit that notification bell. Stay safe out there, guys. Peace.